All right, so let's do a trade review. I'm in bar replay mode right now, so as you can see, yes, it's the weaker asset. Overnight, we're just seeing a continued sell-off. Really what I was looking at here was, if we take a look here at ES, we still have these lows that haven't been taken, so that was kind of my draw. And I was just looking for more continuation of the trend. I wasn't going to fight it. There was no part of me looking for longs today, just given this, you know, you just don't want to fight that. You want to swim with the trend. So the trade itself, let me go into the 5-minute chart. So this is my entry, and I was happy with my entry and where my stop placement was. Really, if I can look at where I could have done better was, if you look at NQ here, we have these stacked equal highs here, which were not taken out. But given that we were in such a strong bearish trend, all I was really looking to see was to see the largest fair value gap, which was on the 15-minute. I just wanted to see that inversed. And also, like, I was keeping an eye on SPX. As you can see here, this gray shaded area is the new day opening gap. And we came up, and this is where I entered. Really, we were just struggling to get past it, and usually when you see this struggle around the 50% mark or 75% mark, it typically means we're rolling over, and we're either going to take out the low of the day, the opening price, the day's opening price, which is down here, and continue on. As you can see here, this black line is really the next area to target. I wasn't even going to be that greedy. I was just going for this low on the way. So being with that, I put my stop loss typically above this candle. I didn't think we were going to get the whole way up to the structural high. Being we came up, this is prior day's low. We found some resistance here and saw pretty strong displacement to the downside with clear draws below. So that the trade was framing up well. And if you even look here, if we even take a Fibonacci and take a look, like we came back up to 50% of the range here, which is a typical retrace point. One thing I could have done better, while we did inverse the 15-minute, we never really took out any key liquidity. And as you can see here, as the trade plays out, we came back up. I didn't get stopped out. So at this point, I thought the trade I might be okay, and it just goes to show, giving my stop loss that extra breathing room kept me alive for now. But eventually we did, as you can see, you're better off even looking at NQ over here. We came up and took out these equal highs. ES did not. So again, we're forming an SMT with the S here, and this right now is the better trade. Right here. So this is really what you want to be seeing. We had this 5-minute inversion here, and we closed through with strength. We had the SMT, so here's really a better trade. And let's see how it's playing out. So yeah, like right now, it looks like my idea was right. I got stopped out. I just got in a little bit too early. Even this trade, it's after my kind of trade window, so I wouldn't have ended up taking it. We'll see how it plays out in the rest of the day, but I don't know, overall, again, AM has just been a very tough session to trade. As you can see, like I've repeated this over the last couple of trade reviews. We're just seeing a lot of the action come in Asia and London, and then as soon as New York opens, we go back inside of our Asia range, and just typically we just see back and forth. You know, it's been super challenging, and like I wouldn't say I've adjusted too well to it, to be honest. You know, I'm taking a lot of L's, just getting chopped up on this range. I have done little things like given my stop more breathing room, tightened up my my TP ranges, really shooting for like sub 1.5 Rs. But as I've said, when your winners are only getting on average like maybe a 1.25 R, like they're just not paying for those losses that are coming more frequently in this price action. On the plus side is, even with hitting multiple day losses in a row, not once have I got emotional and over traded and had a second trade in a day, or the next day over leveraged to make up for losses. which I'm very proud of because being able to withstand tougher period, like good times will come and the markets will clear up and we will start seeing more fluid price action that's a lot more easier to trade. Right now we're not seeing that, and maintaining that emotional discipline and risk discipline during moments like this is what keeps you alive when things do get better, and they will get better. But yeah, it's unfortunate. It's just tough going through a period like this where it's a lot of consistent loss taking. Um, I think going forward, it's like even here, typically what I want to see is okay, yeah, we did inverse the 15, but if I go back to my trade, I think I'll give it a moment. So here when I took it, really okay, we did get the 15, but as you can see, this leg up here, there's no clean 5 minute fair value gap inversion. And I kind of think I need to see in conditions like this, I need, because being the fact we never took out the that's a danger. These equal highs being there is a danger. These equal highs being there and on NQ is a danger, especially when we are seeing overall bullish price, like not bullish, we're seeing in the short term, we're not seeing anything that's crazy bearish, especially not leaving these like highs up here. Like I'm taking a high risk trade, and I think what I need to see on top of the 15-minute inversion, will there for there to be a 5 minute inversion too. So the 15 and the 5 combo, I think just requiring that will keep me out of a lot more trades, and that's what I need now. I'm still trading minimum 4 trades a week, and in these conditions, that should be 1 or 2. Like 4 trades a week is fine when the market's fluid. Right now it's not. We're not seeing a lot of fair value gaps open up in New York AM session, yet I'm trading it as if there is, and I'm kind of looking for trades more than waiting for trades coming to me. So overall, I'm reading the market well. Like my draws are right. As you can see here, I'm all like, this looks like it's going to go to my target, and yeah, I just got whipped out. It's going to go there, which is that has just become a very frequent thing. So I kind of just need to put in like a one extra step of criteria, while it will, and just for the fact it will increase my probability and reduce my trade frequency, which is what's needed right now. Because as much as as you can see here, if I go to the weekly, like we're still in this range. Like right now we're back kind of that October to March, we're still in this range. We have not taken out, say, these 2 lows and seen a heavy reaction. Until that happens, it's range bound. Even though we have had a nice sell off here, it's still being very, very hard to trade. Like look at this daily time frame. Like it's very up and down. Like there's no even large daily fair value gaps being created. So with that, yeah, I need to take a little bit more adjustment in how I'm trading for sure. Just to honestly stay alive during these periods. Like for the most part, I'm happy with the job I'm doing, even though it's been an unprofitable month so far. Well, I would say it's unprofitable. It's just below break even, which is I'm honestly actually happy with. But I need to just get more strict, I think, with my entry criteria going forward. And then once things start to open up again, I can press my trades more, and then we'll see the profitability increase massively, and it will more than make up for the month we've been through.